Seshasayee Paper is a well-managed, integrated player that has weathered the COVID storm and global turmoil by capitalizing on the changing industry dynamics. Over the past few years, it took a number of strategic initiatives to realign its business with the emerging global as well as regional trends. MDB3, the Mill Development Plan, is one such initiative. The upgradation project resulted in significant reduction in inventory levels and helped Seshasayee register some key landmarks in FY22. The company is cash-rich, debt-free and is ready to embark on new capex plans across its two units situated in Erode and Tirunelveli. Recently, Seshasayee emerged as the successful bidder in the e-auction to acquire the assets of Seshasayee Paper on liquidation on a going concern basis. It is geographically very close to the Tirunelveli plant. In FY21, Seshasayee embarked on an expansion-cum-modernization project in Erode. The investment resulted in increased production of paper and pulp, coupled with improved quality and widened product range in FY22. Paper capacity increased by 25% at the Erode unit, including increased pulp capacity to 1.54 lakh TPA. To meet the unprecedented growth opportunities for packaging products, Seshasayee altered two of its machines to manufacture boards. It is now equipped with facilities to manufacture multi-layer products like kraft liner boards, cup stock, carton boards, etc. The company reported a good set of numbers across its units on account of highest production, sales volumes which were up 59% year-on-year and better realization in FY22. It saw significant exports growth in FY22 on the back of continued stability in demand for copier from the US market and better pricing. Also, new products in both segments are also accepted well in the international markets. Demand picked up post-COVID with the reopening of educational institutions, coupled with import restriction and higher export order. As a result, the company made sizable progress in reducing its huge pile of inventory during FY22. Sharp drop in margins is primarily because of the cost push in key input prices, coal, chemicals, wood pulp, waste paper, etc. The company, however, managed to achieve healthy profitability by enhancing its product mix to meet the surge in demand. Strong demand and good order flow led to a positive performance and margin recovery in Q1 FY23. Inventory increased in the quarter mostly because of logistic issues. However, almost all these are now covered by orders. Seshasayee's raw material security comes from the availability of wood in Tamil Nadu. Erode unit is nearly 100% captive. However, for the Tirunelveli unit, nearly 40 to 50% is either imported pulp or imported waste paper. The company has been continuously increasing its pulp production. Both manufacturing units share significant synergies, utilizing excess capacity of pulp at Erode facility at the Tirunelveli unit, thereby reducing the latter's dependency on imported pulp. Seshasayee has been importing 100% of its coal requirement from Indonesia. Sharp rise in coal prices impacted the profitability to a great extent. Now, to tackle this, it introduced biofuel along with coal in its units, thereby curtailing its requirement by 1/3. The company has been deleveraging its balance sheet over the past few years. At the end of FY22, Seshasayee reported nil debt position by prepaying all its term loans. Strong cash flow allowed the board to recommend a dividend of 125% on face value, implying that the payout ratio is still maintained. The company is looking at projects that will add volume, especially in the packaging segment at the Tirunelveli plant. Seshasayee's operations are currently running at 100% of the increased capacity in Erode and about 90% at Tirunelveli. At full capacity, it plans to produce paper board of about 42,000 tons. We believe sector tailwinds, education reforms and ban on single-use plastics could be key impact areas for the industry. Plastic ban is expected to give impetus to packaging paper and paper bags, while the demand for plastic-coated cups and paper plates will gain momentum once alternate coating is developed. Moreover, we see margin improvement on the back of increased volume from MDP3 project and easing of costs. Seshasayee is backward integrated with an ability to tap the opportunity of growing packaging board demand. A comfortable liquidity position will enable the company undertake new capex projects in the near future. All of this provides sufficient headroom for growth visibility over the long run. If you look at the stock and its valuation, it's trading at 3.5 times EV to EBITDA and 6.6 times PE on FY24 estimated earnings. The valuation is reasonable as the continued pent-up demand for printing and writing rate papers coupled with unprecedented rise in packaging boards will boost earnings visibility. The stock price will remain exposed to elevated input costs led by geopolitical crisis and the inherent cyclical nature of the paper industry.